Hey traders, happy Monday. Welcome to the weekly outlook. This is Chris Pulver here. Let's talk about some stocks, Forex, and cryptos. This is the week of August 24th through the 28th. This will be our final full week of trading in August as we close up the month next Monday, the 31st, and we'll see if the markets are going to kick off some volatility. The market seemed to be a little tight, a little bit leashed, but I think that next week we could see the unleashing. We have a lot of breakouts. If you took a look at my weekly outlook last week, I have several currency pairs that are just sitting in boxes, essentially just range trading or waiting for a nice clean breakout and momentum to take us somewhere else. Looking at the indices, we had the U.S. markets tip to new highs in the SPY or try to test that 340 level. The Dow is still about single-digit percent away, but again, is that the target or destination for the bulls to just go ahead and just keep pushing higher, keep drifting higher until something just ultimately derails it? Keep in mind, this is also going into September Q3. So is it easier to just stay the course? Is it easier just to keep things drifting along for right now with, maybe some better volatility, but just the path of least resistance remains bullish and remains risk on until something ultimately changes and shakes things up? So it's kind of what I'm expecting. What I've said here for the last month and told a lot of my traders in the trading room is August is an important transition month. We typically see some tops and bottoms on some of the extremes that you see in these currency pairs and stocks. You also see some transitions where if nothing has been happening, if it's been going sideways for the last couple of months, then we're certainly looking for breakouts and price to go somewhere else other than where it's been going. So just simple horizontal levels. If you've got a resistance point and a support level, if price is trading inside there, that's great. Stay the course as the current environment. But when that breaks out, a simple daily close, a simple weekly close could show you all the evidence you need to take that next trade and keep a really clean trade on the horizon. So there's a lot of stuff I'm watching right now. A lot of margin and cash available that I'm just ready to put into the markets here. Hopefully over the next week or two or three, I will be as aggressive as I need to be, as active as I need to be. But I think the smart thing is to be on the waiting side. Make sure you're trading some confirmation. I'm not trying to call tops and bottoms. Just trade accordingly. Okay. All right, so let's get into the charts here. We'll take a look at the indices, look at some stocks, as well as some Forex pairs. But regardless of what financial instrument you're trading, please understand that there is risk in trading and do not trade with money you cannot afford to lose. It is risk capital for a reason. Okay, if you are out there following me on social media, you can find me out there on Instagram at pulver.chris, Twitter, and Facebook. Everything just kind of funnels off of my YouTube channel, which you can just search my name, Chris Pulver. It's me in a suit. I've got about 2,600 subscribers, looking to grow that, so I appreciate all the comments, all the thumbs up, all the likes, all the subscribers, and content like this and much more will be coming at you on a weekly basis. All right, let's go into the charts, shall we? Currency strength chart for today is not revealing a lot. Again, look at the vertical axis, 30 to the upside, 35 to the downside. Everything's pretty jumpy. Look at your dollar weakness, and then around 9 o'clock getting stronger. Aussie was kind of sustaining that run. I still have amazing bar counts on a lot of these Aussie pairs. Aussie dollar mainly is one of them. Eurodollar and dollar Swiss getting very interesting. I want to take a look at those today in the weekly outlook. So let's have a look-see here. Here is the pound US dollar. Let me get rid of some of these indicators here. Okay, pound US dollar. We are sitting at 3081. Now, I'm not interested in calling an exact top on this, but I do think that the structure is sound enough for this pound dollar to offer a correctional move. Now, if it's a near-term correction, that pulls back to around 2,800. If we come back and actually form levels of equal lows, that gets us back into around 2,300. So what I'm looking for on this pound US dollar is an opportunity to see, will this week's potential indecision offer us a chance to sell this one nice and high? Perhaps we have a nice spike to the upside around 132, sell it nice and high, stop area above this area. Watch this level closely. If you want better confirmation, clean trades, here's what I'm looking for. I want to see this break, retest, and go down towards 2,700. Okay, now where do I trade that? Probably be somewhere over here. Probably be looking to sell it at the high once I have better confirmation if it actually comes back to retest. If I put a pending order up here, I've got to be prepared for a small trade, maybe some choppiness, maybe some noise, and see how the structure plays out. There's no guarantee that this is the top, so be careful around this. That's why I'm a little hesitant to just throw in trades. but I do like the overall setup. If it just, I'm on a daily chart. If it just breaks the low, right? If it breaks this low, if it breaks, retests, or goes, right? Break, retest, go. Break, and just keep going. But if the structure is below 3,000, I think that we have a near-term bearish move towards 2,700. We could come lower. We have equal lows around, like I said, 2,300. So you'd be looking at a stop area above this high with potential profit runs down into 24 to 2,300. That's a pretty favorable setup. Confirmation is going to be important, but I do like that trade. Aussie dollar is another one. Aussie dollar this week might be a really choppy week, but I still love this trade. I am short. I'm giving it the time that it needs. I'm patient with the trade. That is a trend line to keep a pretty close eye on right there. We haven't broken it yet. If you look at a more aggressive trend line starting from these previous lows, something like this also, you notice, hasn't broken the trend line. So if you're just chasing the lows, you can see that we're not quite toppled over from those bears. However, it does look like this is starting to form a rising wedge. So if you connect the levels there, I guess I should just use my tool to do that versus me trying to freehand it. Something like that. So does that channel offer a chance to trade this? Yes, with a little bit more confirmation, with a nudge below these lows, which is around 7,100. Break into the open space, trade this down into previous lows around 6,800. I would love to see price get into this zone. This to me is my safety zone right here. I'll be looking to take some profit right in this window between 68 and 6,700. I'll start trapping as much of the profits as I can. I took a trade right here around 70.20, up here around 71 and 7,200. Small positions. I'm looking to add to it on some confirmation, use this area, and then start taking some profits around 68 to 6,700. So I do like that trade for this week. Again, if it doesn't cooperate, if it doesn't confirm, then I'm just going to be waiting. I think this is a trade that we might have a bit of a, a shakeout type move, or maybe it keeps going a little bit higher and just makes traders really want it. Makes traders have to be patient for it. And that's the thing, is most traders aren't. So there might be a little shakeout here towards the highs around 72.50 or 7,300. But if we stay the course, I still think this will come back down into that window for us to take some profits. So that's what I'm looking at on that pair. Aussie Cad is another one. I'm looking for some cooperation. We're on the right side of the trend line, looking good. Are we going to come back and retest a previous high? Retest a previous high. I like this on the right side of the trend line to still sell off into these profit levels. So I am focused on selling Aussie Cad. Stop area above these recent highs around 96.30 and going into those lows at 9,000. Anything below 92.50 or 92.70, which is around this low, anything below that low, I'm trapping profits into 9,000. So I'm not asking for the Aussie Cad to do a lot. I'm just asking for it to come back and find some previous support and resistance. Aussie Cad I like a lot. Stay in the course to the south. Aussie dollar, like the trade. Eurodollar, let's talk about that one. Eurodollar, I'm also looking for a sell opportunity. I did short this one last week at 1,900. If anyone is interested in this video, if you're watching this, not only do I have a trading room where we're trading together live Tuesday, Wednesday, Thursday, but I also am now doing a signal service for my Forex trades. If you want more information on that, just leave me a comment in the YouTube channel. Just leave a public comment and I'll give you the link to that, or I'll actually include it inside the description of this video, among other things. I have some other education. I have my Keep It Seriously Simple video series, the trading room. So links like that, if you want them, I'll put them in the description for this weekly outlook. So take a look at that. And Eurodollar bringing me back to this point. I took a sell trade at 1,900. Stop area is above 1.2050, but I'm going after, again, previous high, nice little inefficiency, 1.1415. It is, is it a guaranteed winner? I don't know. Not yet. There's a lot of choppiness up here. We could still see this market be really indecisive and noisy this week. That's fine. I'm prepared for that. Now, what I'm looking for is, will it break the low? If we can break the low and clear back below 1,700, I do think that this will end up dropping and balancing back to something like this. Connect the high right there. That would put us around 1350. I'm also going after this level, which is a nice little breakout point around 1400. So I'm trying to be a little bit more conservative on the profit level, but as far as my sell trade, that's around 500 pips of profit for about 150 pips of risk. So pretty good setup overall. I like it. Just be prepared for a little bit of noise. This could be setting up something in this fashion where it's choppy, choppy, choppy. Finally, we spike out. Everyone that's trying to call the top is going to get ran out of this trade or confused, and then it ends up working its way back down after maybe we top out at 2,000 or maybe we top out at 2,100 with an ugly spike. But look at those higher time frames to make sure we're not getting faked out into the trade. And if you're buying this euro dollar right now, I get it, but you're buying dips and you're scalping because I think that overall this is still going to be a trade that comes back and balances. Okay, dollar Swiss, you're essentially flipping this one upside down. Dollar Swiss, we haven't broken the trend line yet, but this is another one that I'm watching. I am currently in for some stack positions. What that means is I started to buy this one quite a while back, around like 9,500, 9,550 actually. So I started buying it at 9,550. I'm still targeting something way up here, around 1,000. So I'm looking at parity on this trade. Now, things have changed because we've had a pretty dramatic sell-off over the last probably 3 weeks. Okay, so I am looking for how does this low form, and if you go over to the euro dollar, how does the high form? Do we have a rising wedge on the euro dollar? Do we have a falling wedge on the dollar Swiss? If that's the case, that's what I'm watching for. I do think that a safe profit level for me on this dollar Swiss holding long is going to be right here around 93.50. Now that's a far stretch from 1.00, but my positions are scaled in to the point where these are smaller trades. My break even is right around this chunk of price action. So if we go up to 93.50, I'm going to be in profit on my position. Now I can choose to hold that longer. I can choose to see, is this low holding? Is this low holding? Are we doing nothing more than coming all the way back to the range high? And that could be the case. This could just be a big range trade, right? I think traders are looking at this like, is it breaking the low? Is it going to go? I mean, it might go lower, right? It might break this area here, head down into 88.50, 8,700. I get it. It might break. But if it doesn't, there is a ton of evidence of support and resistance between 92 and 1.02. And for the last, I don't know how many years, easily the last 5 or 6 years, we've had range levels hold from around 9,000 to around 1.00. That's a 1,000 pip range. So can we hold that level? Yeah, very possibly. So just looking left and trying to trade it really small. We have a 2015 candle that I'd be watching really carefully. This level around 8,700 to 8,850. Watch that for some major support. This goes back to 2015 during that Swiss National Bank debacle. You have no idea what I'm talking about? Just type in Euro Swiss 2015 or type in Swiss National Bank peg, and there will be a massive article. You'll find tons of stuff on it when the euro and Swiss depegged, and that went from 1.20, which was the fixed exchange rate from the Swiss National Bank trying to protect it, all the way down to like below parity. It was like a 2,000 pip teleportation in a second, and it completely disrupted the Forex market. So is it tradable? Yeah, it was tradable. I was fortunately on the right side of that trade. A lot of traders were, but there was also a lot of traders and brokers on the wrong side of that trade. And so it was really disruptive to the overall Forex industry. It shook things up with margin. Brokers went out of business. Brokers were contracting and concentrating into a few versus many. So anyway, long story short, it was a crazy time, but still, technicals are technicals. And even though the market does some really wild things, the Forex market tends to be still the most balanced and technically obedient market. So dollar index, this is going to be very similar to the dollar Swiss. If we're forming some lows in here, I'm watching for a near-term rally on the dollar. Now, are we going to get this breakout? Is it going to be this clean? Is it going to be choppy? We might see it be choppy until we form some lows and start carving out some lows, and then we work our way back up, right? If we have a nice transition from August to September with a bottom in place, awesome. If we don't, okay, we'll wait. We'll watch. If it's a falling wedge, be patient, okay? So dollar Swiss, dollar index, very close as far as the correlation. It'd be the opposite of the euro dollar. If we're forming bottoms on the dollar index, bottoms on dollar Swiss, that means we're looking for tops on something like the pound dollar and the euro dollar, all right? So that's some good direction right there. Trades that require some breakouts. I'm looking for a breakout on the euro pound. It's not happening. I need to see price get back below around 8,900. If we clear that level, this is my box right here. So if we break the lows, if we break the highs, look, if we break the highs, we could scalp this up towards previous highs. If we break the lows, we can scalp this towards previous lows and previous lows. Okay, and to me, there's a ton of opportunity either direction. We're looking at around 300 pips to the upside and around 300 to 600 pips or so to the downside. Yeah, if we break 89, I'm looking at like 83. So big opportunity to the downside I'm just waiting to see when this will break out, and then I'll start following along with the next big trade. Cad Yen is another one that I took some trades to the north. That's a breakout. Hopefully this will cooperate and hold this resistance becoming future support. Looks something like this. Previous highs, previous lows. Are we going to hold this level? Are we breaking out, retesting, and then going back up to retest, 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 something like this as far as profit levels? I am currently long in this trade right now. I'm watching it carefully. The dollar yen is another one that is sideways, and it's going to be a big trade. I think the dollar yen is trying to set itself up for a big move. This could be something around the election. So I'm sure, look, stocks in general, volatility, everything is going to be moving like crazy as we just kind of, look, time has been flying by this year. I mean, it's almost September for crying out loud. And we've had, in the Forex world, I would say we've had about 3 amazing months of trading, and the rest has just been hanging on to things, being patient, watching the markets just bore us to death. Again, I want those 3 months of craziness. I want those 3 months of volatility. I want the 3 months where the markets are just ready to move again. I think the dollar yen is going to be one of those types of currency pairs where this could all be setting up for some massive indecision heading into the election. Look at this move right here. This low to high. I mean, again, I probably have some critics out there, but I think this setup is the low, the high. All of this is corrective behavior. And I think the market, when it's time to make the run is going to be to the upside. Now, that run, I don't think is permanently bullish. I think that is a run that's going to get us back into previous highs, maybe some higher highs. And that would be a great trade to kind of rally through the rest of the year. Is it dollar strength? Is it yen weakness? I don't know. I don't know what the catalyst is going to be. I don't really care. But if this is corrective all the way back down to these lows from March, I'm interested in a low risk, high reward setup. Right? Now, if this does cooperate, look, we might not even go down to these lows. It might just go sideways right in here. And it might be very confusing for traders. It might have a false breakout, come back down one more time, then go back up. It could be as complex and take as long as it needs to take. But I think overall, we're either trading inside the structure, we're staying out of the market, or we're just waiting for this thing to be so wide open and so obvious that we have nothing to complain about. Like, there it is. It's right in front of us. It's a breakout. Let's trade it. Maybe you don't get all the pips, but it could be a nice, simple strategy. So I do think the direction overall is bullish. Like I said, with this low to high, all this is a corrective move for me. It's just, where do we get it? How do we form it? Where do we get it? Is it coming all the way back down to these lows again to just build this position and then off you go for just a straight up move? That would be awesome. That means we're taking trades around 102 or 101, and then taking this up towards 111. 1,000 pips, and it can move pretty fast. Just like we had back in March and April, we could see 1,000 pips like it's nothing if volatility wants to, grace us with its presence. All right. Speaking of volatility, let's go into the VIXI. Let's go into the VIXI. Let's go into the VXX. These are instruments that I'm watching very closely. This is a way to trade the VIX. So the volatility index, aka the fear gauge. The VIXY is an exchange traded fund. If this is going to see bullish behavior, you will see the VIX going up as well. So I'm going to load this up on the weekly chart. And let's see where we're at. So this is all of the wild and craziness from this year. So there's your low around $11. And there's your high around $65. So if we're going to continue to see suppressed volatility, then where does it all change? Well, there's a couple of spots I'm watching really carefully. I'm watching for this to be a trend line break, something super clean and super easy to trade. The next level would be down here. Do we come back into this little gap? Now that low is $13.44. So let's say hypothetically that we just stay indecisive, 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 and then we have a nice big candle. That would be signs for me to buy. That'd be trade 1. If we come back and revisit the lows of the trend line, that'd be trade 2. I would hold this thing off of these lows. And even if we don't make it back to 65, I do think that we have a jump to the upside coming. Let's call it 15 to 40 bucks. Pretty good trade, 3 to 1, something like that, right? It could be much more to the upside. We don't know. But if I'm buying this low, I like the idea of this one at least returning to some credible level of volatility, having some, some excitement by the end of the year where the VIX, the VIXI, those related instruments do start to reflect that movement. So I'm looking at the VIXI to trade, looking to buy low. The VXX is another one. And you'll see it similar. Again, here's the weekly chart. And the VXX tends to sit a little bit higher than the VIXI. Okay, so we're currently at 24.41. And this one, you can see how big this move was. We had lows at $13.42 with highs, intraday highs at 78.84. So, closing out at that day or that position or that week was not exactly guaranteed to have that big run, but it was a payout of, the year, the decade for sure. It was a great trade. Now, more of the same. Do we come back into these levels? Let's take a look at a trend line. Can we break that trend line? Can we come back in and test some of these lows? Do we come back in and test this gap? Okay, that low is around $16.35. So again, watching for that area, $16.35, $16.50, $17. What is the low point or the close here? The close at 22.90, that's a bullish candle. Okay, it closed at 22.90. The low is at 16.35. So if we just come back and test that candle, we're looking at entries around $17, $16. Anything there looks pretty good. If you want better confirmation, then wait. Wait for something to give you a green sign right there. Wait for something to give you bullish confirmation, trade it there, pulls back to the lows again, trade it there, and see if it goes to a respectable amount, right? All the way back to the highs, awesome. Halfway back to the highs, that's fine too, that pays. Longs around 17, closeouts around 50 bucks. That's a pretty good reward. So those are instruments I'm looking for. How does that translate into stocks? Keep an eye on things. Looking for the Dow Jones to probably come back and retest some of the gaps from mid-March when we had actually the gaps from February where we started to sell off aggressively in March. The Dow has not made new highs. The S&P tapped those highs, and NASDAQ is 15% higher than the highs. The stock market looks like it's just going to stay the course. So what can disrupt it? Well, colleges, like I've been talking about for the last couple of months, K through 12, are we going to remote learning? Are we going online? Again, this is just in the US, but, globally, our universities are bringing in masses of people, 10,000 students, 20,000 students, 50,000 plus students. What's the deal? I know that North Carolina has already gone to online after like the first week of classes. College kids love to party, so they're going to get together and they're probably going to catch some COVID. So anyway, this could be part of it. This could be part of the derailment. We've got unemployment claims that still are sustainably high. And despite what the markets continue to do, like I said, this is Q3. Maybe you can't stop it right now. It's not our job, right? As traders, we just participate. Whatever the direction is confirming, whatever it's showing us, that's what we're looking to trade. If you're brave enough to call those tops and bottoms, that's fine. You either do it with deep pockets, small trade sizes, or you wait for confirmation. Not that difficult. All right, so trade setups I like this week. Still watching the volatility instruments very closely. Looking at futures every single day. We'll be watching this in the trading room. Clean signals for my signal service. But I expect that now to be a time where it's like cash margin at the ready, robots at the ready. It's just I'm ready to turn it loose. I'm ready to get things cranking. I'm ready to see some better volatility. I'll also be watching. This is a website that I frequent quite a bit in my trading room, mataf.net. And I check the 2-week running averages for the Forex market. So this will give you the average daily trading ranges for the Forex pairs. So over the last couple of weeks, what I'm really interested in seeing is where are the pound crosses? Where are the euro crosses? Where are the, quote, high volatility majors and crosses? So the Eurodollar, for example, the last couple of weeks has been 86 pips a day. That's over a 2-week average. Pound pairs in the low 100s. Now, pound New Zealand had a decent run to the upside. We made some great profits on pound Aussie. Last month, we made some great trades on pound New Zealand as well, euro New Zealand as well. But again, this is, I would say, at best, medium volatility. I would even say it's low volatility. Now, if these start changing, if we start noticing that pound pairs are creeping up into the high 100s, 170, 180, 200 plus, now we're talking about day-to-day opportunities. Now we're talking about breakouts and running and trends getting back into full swing. So when that starts to happen, again, just check the website, see what's happening. Look at the 2-week calculated average. Are we getting day-to-day encapsulations that are higher than this? If they are, pay attention. If you have boxes on your charts with horizontal levels, support, resistance, pay attention. These breakouts are coming. Volatility is coming. I don't think it's something we can run from. I think it's something we need to welcome and be excited about. I certainly am, but you don't want to be caught on the wrong side of it. So be willing to stay pretty neutral. Be okay closing a losing trade. Be okay closing a trade that's going against you if it's invalidating where you thought, okay, here's where I'm wrong. It's okay to get out of a trade. I do it all the time. I hate it. I hate losing, but if I have to, I have to. Why? Because it's not worth fighting something that could run irrationally in the other direction, right? You're trying to tell yourself one thing, you will stay in that bad trade until you're like, I'm going to prove myself right. Well, that can be expensive, that can be stressful, and it's sometimes just not even worth that effort. It's way better just to trade what you see, trade the confirmation, and that's what I'm trying to do. All right, traders, so that will wrap it up for this week's outlook. Again, the week of August 24th through the 28th. If you are following me out there on YouTube, you just have to type in my name. So go into the search tab, Chris Pulver, there I am, and that's me. So you can subscribe to the channel, click on that notification bell, like the video, leave me a comment. If you're leaving me comments, I try to do my best to get and reply to them. If it is a question about, can you do a video on this, please feel free to leave that comment as well, and I'll just add them to the list most likely. If it fits nicely within the context of my best trading strategy video series, my Keep It Seriously Simple, I will do that. I have a running list that I'm still trying to knock out, and I'll continue to add that content in. So inside the description for the weekly outlook, look for those notes on the signal service as well as a trading room and some other education out there as well. All right, so let's have a great week. Thanks for watching. I will see you in the trading room, see you in the markets. Happy trading, everybody. Talk to you soon. Bye-bye.